Hello and welcome to theprofitroom.com. Don't forget to hit the like and also the subscribe button. You're watching a live trade of us trading NASDAQ futures. Now we start to get in this trade short by adding very fast. Now if you look at the previous two bars before we started going short, they were a massive red bar that had a bottom and tail and a massive green bar that had a top and tail or wick. That shows there's a lot of volatility in the market. This is a dangerous market to trade because of volatility. But we get in a trade based off of technical and candlestick analysis. It's very important that you have your skills sharpened when you're trading a choppy market because you need to react very fast. As you notice, we get in a trade short expecting the price to go lower to make money. We get in with 4 contracts and we start scaling out quick. Now 3, and you'll notice 2, then 1. Now, why are we doing this? As advanced traders, we know that it's very choppy in the market. We're dealing with stimulus news, we're also dealing with election, and also other economic things that are happening in the world. So as we play this trade, we're trying to hold it as long as possible, especially since we see previous bars are very volatile. I can't explain that and stress that the most. Now we see here we have 1 contract left, another bar is starting to turn green. So we already made our good money already. So we're trying to anticipate a bigger move to go lower. So this 1 contract is our runner. This is like the extra little bonus on the cake. You see we almost got to $300, $290. We're trying to hold this to see what happens. This is great money, right? Great money, but trading the futures market or just trading in general, it could pull back on you very fast. So always be aware of the type of market that you're trading. You notice that we're still holding this and we had 300 and some change, which was great, but now it's starting to push back. We don't want this to go red at all. We still believe in the dominant trend of going lower. As you notice, the volatility is pushing it back and we're still trying to hold on. Look, $15, $30, we had 300 and something dollars, but we end up getting out of the trade because we don't want the trade to go red, right? So now as we look, we end up getting back in the trade. Now it's very important. You may say, hey, why didn't you just take the $330? You're right, we could have taken that, but we're looking for a bigger move, a flush lower based off of our different levels that we have. So ideally, it wasn't wrong not to take the money at the $300, right? But we didn't go red. That's a very important to understand. We didn't go red in the trade because we already booked profits. So we get in this trade because now we're taking in a lot of factors, right? We're just not trading off of this screen right here. We're looking at the bigger picture. Now, ideally, if you're a newbie, you should have taken the money and just walk away. But we see something that is going to bring in extra selling pressure into the market on a different time frame that tells us we need to stay in this trade. This is the confidence that we show you how to do at theprofitroom.com when we teach our students. So we're starting to get the move that we originally wanted, but we realize that we're running into some areas of support and we end up bailing on the whole trade to book some nice profits of a little bit over $1,300 in 3 minutes. So if you want to learn how to trade like this, come over to theprofitroom.com. We teach you how to trade in all market conditions and help you build that confidence to be a professional trader. As always, get educated and trade safe.